Hey everybody, Jimmy here. Welcome back to the channel. So today's another red day for me, unfortunately, but I was able to control my losses and keep it to just a 0.5 R. Normally I risk 1 R, and today I was able to move my stop a little bit and limit that damage. So I'm gonna break that down for you. But in this video, I wanna show you one moving average that I think you should have on your daily chart because it's super important, and I can show you a really good example of how it could have kept me out of the trade that caused me a loss today. So let's dive in. Okay, I've got the chart up on Verizon Wireless today. This was the trade I took today, guys, and I want to show you what I saw in it this morning, why I was interested in it, and then we'll kind of break it down from there. So I had the daily chart up today, and if I zoom out a little bit here, you can sort of see how this was yesterday. We had a push down, overall red day for Verizon yesterday. But then we had another gap down this morning, and you can see that we had room sort of down to kind of this $56 area. So from where it opened today, which was at $57.62, that gave us about $1.62 in room that we had to move to the downside. So that's what had me interested in Verizon and why I was considering it for a short position. I was looking for a 3 or 4 bar play on this. And I'm going to flip over to the 15-minute chart, and I'll show you what happened this morning. So right here, this candle opened up and then pushed down really heavy and broke this pre-market support. So once that happened, that told me that this was my igniting candle. This is sort of step one of that 3 and 4 bar play. You got to have an igniting candle that is clearing some area of support or resistance. So this support area on this low, which would have been 57.45, it went ahead and cleared that low and then closed. So when this candle opened up and started to just pause, wasn't pushing lower, stayed in the bottom 50% of this candle, I said, okay, this looks like a 3 bar play is setting up. I'm going to go ahead and look to take this short. So I went ahead, placed my order below this low, so 56.82. I placed my stop limit order to go short at $56.81. And that's where I got filled, and it took it short right on this candle. And I actually had a really nice move. I was 60% of the way to my target. I went ahead and placed my stop loss of 16 cents and with a target of 32 cents. And so I got about 60% of the way, and then it just sort of drifted back on me and popped all the way up and ended up stopping me out. Then it rolled back over, went right back to the same point, and then sort of drifted back up and away. So it was kind of a complicated trade in that, you know, you get to that point in every trade where you have pretty good profit. You know, I was up well over 1 R, and I said, okay, maybe I should, it was like 1.2, 1.25 R, and I thought maybe I can go ahead and take this and, or take partial profit. You're always struggling with that trade plan, you know, how much do I take? But I'm wanting to go 2 to 1 risk to reward, all or nothing. So I basically set up my order, and if it doesn't hit 2 to 1, then I either close it by the end of the day or it goes against me and I get stopped out. I'm trying not to take partial profits along the way, because over the year that can add up to be a lot of money left on the table. So I am recording these trades, recording the results, recording how far they are going in terms of R values, and then just seeing how things are going. But here's the thing that I didn't have on my chart that I do have now, and I'm going to be having it on my chart in the future. And this is what I talked about in the intro. This is the one moving average that I really think you should have on your daily chart. And if I flip over to the daily chart and zoom out just a little bit here, is this blue line. This is the 200 simple moving average. It's on nearly every trader's chart. Everybody's watching the 200 SMA. always looking for bounces. And it's funny, the minute I plotted this on my chart, I immediately saw this bounce, this bounce, this bounce, this bounce, this bounce, this bounce. And then what did I do today? I shorted at 56.81, which is basically right here, like right here. So if I draw a line there for a quick second, just so you can see it really well, let's go right around 56.81 right in here, and we'll just draw that line. So that's where I shorted, right into that SMA that has had 1, 2, 3, 4, 5, 6 previous bounces basically since Christmas of last year. I should have never shorted into this level. My thought process was, if I draw another line, I said to myself this morning, oh, look at this. I seem to have sort of something in that area. I said I've got till 56 or maybe even, yeah, right around $56 to play with, which would have allowed for my 2-to-1 to work. But I wasn't considering this 200 SMA, and that was a huge mistake on my part because that clearly caused this to bounce. And if I flip back over to that 15-minute chart, or let's even go to the 5-minute chart, look at that. Bounce, pullback, bounce, pullback, bounce. It's just bouncing all along that 56.60 line, which is, conveniently enough, 56.60 is right there. Basically a nickel above that line. And remember, support and resistance, it's not a line, it's a zone. So either side of this line by 10 or 15 cents can cause a support or resistance bounce. So that was a huge lesson learned today. Moving forward, this is going to have a big impact on my trading because I'm not going to consider positions that are in this sort of scenario. And the interesting thing is that when I'm looking for stocks in the morning on the daily chart, looking for breaks above and below support and resistance areas, I'm also going to be considering this 200 SMA line. Because let's say tomorrow we wake up and we get a gap down and we're down here, that's a whole different scenario. Now you've got room, now you have overhead resistance that's going to help pin it down, and now you've got room basically down in this $53 area. So it's very interesting how that worked out today, but definitely played against me, and that was really the only trade that I was seeing today. And so my trade plan for it was, off this 15-minute chart, I went ahead and said, okay, I'm going to take the entry right at the break at the 56.81, and then I'm looking for 32 cents to the downside, and we didn't get there. But I said I'm going to stop myself at 16 cents, so just 1R. So I was stopped at 16 cents. When the price action moved in my favor and we cleared 1R, so when I had made 1R, it had gone more than 16 cents in my favor, I moved my stop loss from 1R to 0.5R. So basically I had a 16-cent stop loss. I moved it up so it was 8 cents. So I was just limiting some damage because one thing I'm noticing is when price action comes back at you and it's basically looking like it's going to come back and stop you out, in my experience has been very rare that it comes right back to my stop loss and then rolls over and works. That hasn't been my experience so far. So my thought was, if it comes back half an R, it's very likely going to come back a full R on me. So that's why I decided at 1R of gain that I would go ahead and move my stop loss a little bit tighter, not to break even, but to 0.5R. So doing that today prevented me from a full R loss, and you can see I ended up down $25. So my R value, for those of you that follow the channel, you know that right now I risk $50 on every trade, and I either make 100 or lose 50, and today I lost 25, and that's because of this slight modification to my trading plan where if I move in favor of myself of the trade more than 1R, I'm going to go ahead and bump that stop loss up just to help limit some downside, and because I think when it comes back to 0.5R and it's going against you, very rarely does it turn around and go and work, in my experience. Others might have a different experience, and in the future I might decide, you know what, actually I should just go ahead and leave it alone and not bump it up. But for right now, I think it's important for me to trial that, so I'm going to go that route for the time being. But anyway, I hope you guys had a great green day. Let me know what you traded. Let me know if you jumped into Verizon and how you approached it. You know, did you grab an entry on this, and did this little lurch back up get you? Yeah, just a crazy trade today. So anyway, have a great Thursday. We'll be back at it Friday morning, and we'll see you then. Thank you for stopping by.